Coin Traders, what is going on? Thanks for joining me for the show looking at ICP, Internet Computer. Been a little bit since we've talked about this, and it was, I believe, on this most recent move up that we did last talk about it. And one of the things we did say is that if we did retrace all the way to the support line, that we were going to have to see a lot of upside momentum in order not to break this longer term level of support, because typically what happens in these type of moves is that we do find a long base of support, a rally, and then a higher low. But since we did lose that, that was putting us on the hook more likely to prove the defense of this overall level right around 290 for ICP. So very fortunately that did happen, and we did see a nice defense over a few days, as you can see with these candles wicking down below this line, which we can actually draw pretty nicely as a longer term point of closing support on the daily. Now, these type of patterns also have a very good tendency to see a lower high and continue another test. So the fact that we actually didn't see that and saw a low bouncing off a high of 2957 was our big confirmation sign, especially once blowing past the big level of resistance that we had overhead at 323, which you can see looking left was a big point of support on this initial bounce and another big point right off the initial flush. So we did form it as resistance twice before the candle on the 23rd of October had a very nice upside to break that. So that was a huge confirmation sign right now, especially after topping the other trend high coming in at 334. So essentially we did have this pattern where we set our low, our high, a higher low, lower high, higher low, forming this more of a triangle type pennant. Typically we do expect the breakout to be bearish in this type of instance, but we do know that since the crypto space is trying to anticipate an upcoming Bitcoin ETF, that has been the cause for a lot of this upside move with Bitcoin and especially the rest of the crypto space. So with that said, I don't necessarily think that'll be one of the things that continues just to push this up and up and up and up and up, because we have to be mindful that right now there's a lot of buying in anticipation of an ETF. But once the ETF actually comes out, there's not going to be as much hype. So probably a lot of the big chunk of buying is starting to happen right now. But in the shorter term, and we'll look at this in a second, we are starting to see a little bit more consolidation, but we do know that the longer term is a little bit more overbought here. So let's actually go ahead and pull up the RSI for the daily. So you can see that peaked out right now for the close 72.25, which happened on the 24th of October. So the yesterday's bearish candle that did close pulled back slightly. So we did look at a close of about 70.2. So not quite enough to push it back below the 70 line, which does usually indicate overbought conditions. So still in a little bit of an overbought condition formation on the daily. And so realistically, we are expecting a little bit of a pullback here. And the reason is because especially after 5 days of continuous upside, let's actually go ahead and look at the volume here. We can see that the volume was actually the most substantial volume that we've gotten since back in the middle of July here, when we were in this little stagnation triangle right around the $4 level. So now we are looking at our peak volume, and you can see we have seen a little bit of decrease in especially the selling pressure, which is a good sign, but obviously decreasing and slowing down bull volume buying, especially if we look up overhead at a very big resistance point at 365, which we're drawing on the screen right now. Looking left on the initial flush back in June, big point of closing support that we found for the bounce before ultimately flushing below it and then holding this level as resistance from the middle of October, pretty much to the, August, the middle of August through the end of August. So right now, after especially blowing through multiple resistance levels at not only 323, but also 340 as well, the current setup is getting kicked off of that 365 resistance. And now ideally, we would probably see a pullback back to that 340 level. So let's actually turn off the volume here and go ahead and zoom in on the current pattern, because what I want to look at too is how we are looking at almost a full cross, and we're pretty much going to expect this to happen in the next couple of days unless we just get a drastic flush, because otherwise the next few days will actually hold this out long enough for the 26-period exponential moving average to cross above the 50, and then we will be in a complete bullish formation above that. What's also significant about that is that the EMAs will be on top of this previous level of resistance, which is just another big point of support to ultimately come back to. And I think this will be our ultimate low point of support that we do get to right above the 320 level at 323. Now, another big line that I do want to talk about is just a very big resistance trend line that we were looking at, which also is intersecting right now nicely between these exponential moving averages. So as we can see, big point of resistance initially got established before we saw resistance again, and then resistance one more time before finally kicking off these EMAs and then finding our nice volume pump to the upside, holding off a very nice close with that follow through. So like we said, a lot of great bullish things right now, but that's not necessarily a guarantee that we're just going to keep seeing up and up and up and up. And I think there is still a lot of hype and speculation in the coming days and potentially even weeks for the ETF, but we know that it's not necessarily going to be sustainable, and it is just kind of one of those events right now that is causing a lot of hype and buying to happen, especially after such a long and drastic bear market without many reasons and opportunities to be a little bit more optimistic and hyped up. Okay, so now flipping over into the 2-day, and just want to talk about the trend line, and this actually extends up a little bit higher too, because as we can see, we actually looked at this as being a very nice point of resistance that got rejected, and then on the candle that closed back on the 20th of October, that's when we saw our very nice break with a lot of great follow through. And so the other nice thing about this as well, and let's go ahead and delete this trend line here, is that just looking at the exponential moving averages and specifically the 26, let's go ahead and turn off the 12 and the 50. You can see big point of resistance recently on the bounce, finally closed above it, and then on this candle, saw it as support because we did find a very nice wick and shadow below, ultimately confirming the body and another lead to the upside, which did confirm that this was a very relevant line to be aware of, especially since we've seen so many confirmation signals of not only resistance, but now being able to confirm it as that point of support as well. So now up overhead, very critical and key level to watch out for, and you probably are guessing it, but right around the $4 psychological line. Obviously, this was an extremely strong and supportive level for multiple months here. And in addition, this also was confirmed resistance after coming off the initial bounce back in June. So suffice it to say, I think it's going to take a lot of volume and a struggle to actually see prices get above it. And so that's why from this zone of about 365 all the way up to about $4 psychological, that is where we're going to expect, especially with decreasing volumes, that we are going to find a little bit of slowdown, probably pulling back and establishing some support. Meanwhile, in an ideal scenario, being able to confirm and consolidate for a decent period of time to confirm strength and a lot of those downside supports. So now turning on VPVR, volume profile, visible range, you can see that up overhead, just like we talked about, huge center of mass coming in right at the $4 psychological level, which as we know, very big point of mass due to all the trading of an established region like that. So as you can see, the mass kind of tapers up to that level, which does mean that we are going to start to slow down, especially as we do approach $4 psychological. The good news looking at this VPVR, though, is that if we do look at the slope of massive volume, you can see that we did defend and bounce nicely off this low coming off of 290. And so the price was a little bit easier, especially as we did rally through about the 340 level, despite that being a technical point of resistance. So to be on top of that level right now, still a very good sign, but could ultimately end up seeing slippage back down to the previous resistance point that we had talked about, which could potentially even go down to about as far as about the 320, 323 level. Realistically, I'm not expecting that to happen, but at a worst case scenario, even if we do fall back to that point, that is still going to maintain a higher low on some of these longer term charts, especially since on this 2-day, our previous level of low was looking back at 2957. All right, so flipping over to the 4-day right now, just want to talk about the exponential moving averages once again, because as we can see, very big in key relevance here, because we did have rejection and resistance get established once we had our sell-off after the middle of the year, right around May. And ever since we did have that pullback, we were getting stuck up at this 12-period exponential moving average just until this recent 4-day candle closed back on the 20th of October. So the current candle that we are looking at right now still showing follow through from this initial move. Meanwhile, yet still maintaining the 26-period exponential moving average as that nice level of closing support, even though we're about 2 days out from seeing this 4-day candle close. However, the big key and importance here is that once we actually get stuck up at a resistance level from an exponential moving average standpoint, then we look to the next one, the next one, the next one. And even if we actually invert this chart, you can see that on the way up, it's still the same type of pattern, where even on the upside, we would actually ride it to the upside. Once we break that, then we look to the next level. So it's the same instance on this side of where we are still looking at it as resistance, but because we actually broke it already, now we're actually looking at increasing to the next level, which on this 4-day chart, the 50-period exponential moving average will pretty much start to align right with this $4 psychological level, which was this very big key level previously. Now, flipping over into the weekly chart and kind of had to put it in the logarithmic scale for some reasons, most notably because the size of the sell-off initially on a linear scale just makes it so you can't really even see the most recent price action, despite it being pretty significant and substantial. And so do just kind of want to talk about this overall pattern here. So we have a falling level of support. And then meanwhile, if we go ahead and look at resistance, we are looking at a big level and a falling wedge, which on the current weekly candles, the most recent two, we are starting to see a little bit more of that breakout. So on the current pattern, typically what happens is we do get a breakout, a back test for confirmation, and then a continuation. That is one of the signs that we look for. So right now on the weekly, we're just looking at our initial breakout, probably getting rejected shy of the $4 psychological level. And then I would expect at that time to see a little bit of retracement, confirming some support probably around the $350 level. And then that back test will be superseded by a move above the $4 level, confirming this as a very nice falling wedge breakout on the longer term chart. So do want to zoom in here and talk about the current weekly setup on a better scale, specifically the candles and even more specifically the body of these candles, because one of the things that is significant here is that if we go ahead and look at the most recent bullish candle that closed at the end of September here, you can see that we actually fit 3 previous bearish weeks inside one body. Then the following on a bearish week, bears did try to take control again, but the bulls ultimately did maintain control and maintained body size that was greater than the size of the body of this bearish candle. Now, the next 2 weeks, we did have an attempted sell-off, which is why we have a lot of these lower shadows on these candles. And so despite not having that good of bodies on these bullish candles, and both of the bullish candles also fitting inside this one bearish candle, the magnitude of the lower shadow compared to the body size is actually what really dictates this as being a nice candle. Because as bears did try to push price down, bulls bought that dip on multiple occasions, which did form these 2 bullish candles. Now we are getting that nice bullish follow-through candle on the current week, which does close in about 4 days. And especially after blowing past a very significant line of weekly resistance right at about 332. So as you can see, weekly resistance for the close, looking left, big weekly resistance for the close, weekly support on these bearish candles, and then looking farther left as well, nice point of price level support on this big candle. Now, do want to turn on weekly volume as well, because as you can see, we did bottom out. And if we do zoom out, you can just see how minimal the volume was overall, even on this overall sell. So the fact that on these 3 candles, and especially the 2 weaker ones like we talked about, we did see this much bullish volume coming in, that is one of the good signs that we're looking for, and especially week over week continuous. So even on the current week, we are about 2.3 million. Last week's closed at 2.302. But we're only about 3 days into the current candle, so we're definitely going to see a volume bar that's greater, which does mean week over week of increasing bullish volume, and negating the bearish week, that's actually going to be 5 weeks of essentially increasing a bullish volume, or increasing volume rather, which does help to confirm that this is a very nice reason to believe that that's a local bottom, and that strength of the move to the upside is going to be complemented by the fact that we do have nice increasing volume coming in. So do want to flip over to the shorter terms right now. Specifically, we are going to look at the 1 hour before we do wrap up here. And right now you can just see what a very nice tight consolidation pattern this is, but also we are losing our high. So as you can see, we found our high, found a lower low, higher low, lower high, and then now trying to defend that higher low once again. Meanwhile, all in the while, trying to defend 50-period exponential moving average, which you can see we are doing right now. So if we do lose that and continue to see lower highs, and we do end up breaking to a new lower low, this is pretty much going to confirm our local top right now, which will mean a resistance point getting established below the $4 psychological, which does mean coming in right now, rejecting from a price high of 3,702. But like we said, overbought on the daily charts does mean that we are going to be expecting a pullback down to some of those supports at some time soon. So right now, that is why we are looking at some of the shorter time frame charts, and it does start to increase the expectation that despite this being a little bit more of a consolidation pattern, especially with some lower volumes here, likelihood is starting to break more to the bearish downside just because of the longer term overextension on those charts. But like we said, 365 all the way up to the $4 psychological level is going to be extremely resistive, so I do expect this to take a little bit longer than we are seeing the move to the upside thus far. So definitely continue to be patient because I don't really see anything immediately over the $4 level unless we do start to get another big hype and euphoria-driven pump from some other type of good bullish news. But unless that does happen, then yeah, my general expectations are then pretty much we're going to start to look at what's happening on the current consolidation pattern and chart. And then like we mentioned, a bear break from this overall pattern will be a top on the longer term charts. And then we're going to start to look for longer term consolidation. So do appreciate you watching. We will check in again soon. I hope everyone enjoyed. If you did, please hit the thumbs up, like, and subscribe button. Also, don't forget to drop me a follow over on Twitter at @coin_trades is the handle over there. Do post more frequently. And do love getting back to everyone over on the Twitter or X platform. Alrighty, well, that is going to go ahead and do it for now, though. So hope everyone enjoyed. Do drop me a comment. Let me know your thoughts, predictions, disagreements, all that stuff down below. Appreciate all the love and support. As always, does mean so much. Stay safe, take care, and I'll catch you back in the next video.